I'm not asking for a view on that particular stock, but what do you make of how people should approach the consumer lending business on the back of the call that we had from Bajaj Finance? And what's your view out there?
Good morning. If for this to look at the present, it's good to look back at the past, where the consumer lending was the darling of lending. All banks also were, focusing on retail lending. Corporate lending was always was looked upon as a high NPA business, especially in the most recent business cycle. Now, suddenly, in a Corona world and a post-Corona world, clearly for the next couple of quarters, consumer spends are likely to moderate. Yes, it will come back eventually. And second, there is a moratorium on repayments of existing loans. Yes, again, that is short term. But this kind of derails next 2 quarters. Now, can it lead to a certain amount of NPAs going up in the shorter term? Probably yes, for select players. So will valuations hold up like they did in the past, as in the kind of a premium multiple that you gave to some companies? I don't think so. The multiples are likely to come down. And second, if you look at in this country, more 40% of the economy is a parallel economy. They're largely self-employed, and they also go out and borrow and buy various things. Now that sector has been hit, or rather the parallel economy will be hit probably far more than the organized employees. And so, which means at least for the next 2 or 3 quarters, lending is going to come down. But so against this backdrop, I think the multiples will come down. Yes, they are strong businesses, but the demand side of the equation will slow down, as well as GNPAs will marginally go up.
Okay, it remains to be seen whether financials will continue to be the darling of the street. Remember, last 10 years, we've seen a good contribution coming in from there, be it Bajaj Finance or the HDFC twins. And it is the unsecured lending retail part of the business which has spooked concerns even in the market. But Chakri, I want to talk about a pocket which has been doing well. And even in today's session, I think pharma continues to, see increase in prices today as well. So Cadila, Cipla, Biocon, across the board, we are seeing buying coming into the pharma companies. Considering it's a pocket which has not done well in the last 3 or 4 years, do you think it's just the beginning and this rally will last? The pricing pressures we were seeing for these companies may ease going ahead?
Yes, I think pharma as a sector will do well, not just for this year, but also for the next couple of years. In terms of, because there is a certain amount of re-rating that is happening. It kind of coincided with the fact that you had an FTA-related issues facing the sector in the past couple of years. Some of it for individual companies is kind of drawing to a close. Second, individual companies, you take Dr. Reddy's with diversified basket of products, strong US demand, earnings visibility fairly strong, and valuations are looking good. IPCA, on the other hand, domestic, largely focused business, again, valuations looking good, and with a strong, decent pipeline. So you expand that, where Cadila valuations are very attractive. You look at Glenmark, yes, it is a slightly more volatile stock in terms of running its business, but its valuations are very attractive. So a number of names in the pharmaceutical industry are now beginning to look attractive, and their earnings outlook which is a price commodity in current uncertain times, is looking fairly robust.
Chakri, that's the question, right? Non-lending financials. Would you reckon that that's the pocket that the market would focus in when they look at financials in India? Because lending financials might have these asset quality issues come up over the course of the next 9 months.
Yes, they will have these asset quality issues. But in terms of, if you look at even insurance companies, yes, well-established fact that demand will remain fairly robust, etc. But the question is, as a portfolio, how much does one invest in? These are new sectors, small sectors. They will see a certain amount of what you call, at some point, valuations will catch up with them. So yes, they're good sectors to invest in, but not clearly to go overboard on.
Chakri, when I look at the nature of the stocks which have bounced back big time in the last 1,000-point rally on the indices, some of those internet-based businesses like IRCTC and a couple of others stand out. The specialty chemical space really stands out. I mean, Deepak Nitrite today is at 460. It's almost as if the whole correction in the markets didn't happen. Aarti Industries is back to 850. So it's not just the biggest name like SRF. Some of the mid-sized names too are bouncing back very, very strongly. And each of these is a leader in the product that it manufactures in the world. Do you reckon that this is a pocket that people should either stay invested in or even make fresh investments into?
Yeah, this is a pocket which clearly is on a growth curve. They have seen fairly strong demand over the last couple of years, and that is set to accelerate in the coming next 3 to 5 years. Simply because now you will see a certain amount of diversification away from China, and these companies at the margin would benefit as a result. And all the companies that you've been named, whether it is SRF, the market leader, they're very diversified businesses within the company. And so, some pockets of the business, of their businesses, will keep firing on irrespective of the economy at large. So, and while, the end products are fairly essential in nature, so they are not, so the demand for essentials will remain robust. And the valuations, one of the reasons these companies do not usually carry much higher multiples is because they're relatively lower margin businesses. But as they gain in scale and volume, as they grow over time, I think there is a sufficient case to be made that investing here would also yield strong returns over time.
Okay. Chakri, the other question is telecom, and it'll get restricted to one stock, but so be it, because Reliance is a conglomerate of sorts. I wonder if Bharti Airtel fits the bill right now of businesses which will escape this COVID-19 issue relatively unscathed, because the business typically does not get impacted by virtue of lockdowns or lower spends. These are annual spends which keep on happening.
Yes, this business does not get impacted as much because, what goes down, and yes, a certain amount of, what you call prepaid customers, their rechargings have come down simply because shopping outlets have remained shut, and also businesses have shut, so which means that amount of commercial demand has come down, but that is made up by the fact that you and I are chatting online today. So net, it doesn't make much of a difference to the overall business, but in terms of their debt profiles, and given the nature of the business, there is the stock that, yes, ARPUs will go up and therefore one should invest. But why are ARPUs going up? They're going up because to catch up from a loss-making situation to at least try and break even over the following years. So I would not invest in such companies where the debt profile, or rather the profitability of the future profitability of the business, does not really look that rosy.
Chakri, the other theme probably that the market has been discussing, and these are unprecedented times to look at oil prices where they are right now, it somewhat creates a macro tailwind for a country like India, which exports its oil requirement. But keeping all these factors in mind, maybe at a certain point going ahead, it will create that macro tailwind. Would you then take a bet on any oil sensitives?
Oil sensitives, you said, as in crude related?
Yes.
Yes, clearly, yes. You look at a number of companies, even companies like Bata and Relaxo, these are footwear companies, but their raw materials are crude linked. And with, crude prices and crude related products, raw materials coming down fairly sharply, these profit margins of these companies will significantly expand, even if they do not assuming they do not cut prices significantly, which I doubt they will. And now you expand it to multiple sectors. They name all the chemical companies that we talked about, then all the paint companies. Now, yes, demand for the next couple of quarters is likely to be sharply down in India, but again, so are the costs which will come down. Then you look at a whole bunch of petrochemical companies, downstream petrochemical companies, like polyester yarn companies. All these companies across board will benefit whether the crude is at the current prices or even if they're at about the $40 range, $40 to $60 range. That's a wide range, but in the current environment, I think as demand comes back, these will be the first beneficiaries.
All right, Chakri, we leave it on that note. Appreciate you joining us today and taking us through your thoughts on markets.